Good morning, John Stead from HMH, with you for our annual federal budget update. As usual, there are winners and losers. The winners this time around are small business owners. Some great benefits for those people. Those seeking to ensure their financial future through superannuation, on the other hand, are the losers this time around. Several issues about which there was widespread pre-budget speculation were not touched. These include negative gearing and capital gains tax, so no need to worry about those topics. So let's have a look at the wins for small business. Firstly, the definition of a small business has been expanded to include businesses with a turnover of up to $10 million. This has been redefined from the previous threshold, which was only $2 million. Businesses under this $10 million threshold will be able to benefit from things like accelerated depreciation, including the full write-off of individual assets acquired for up to $20,000 each before the 30th of June 2017. Other things such as simplified trading stock rules, prepayments write-offs and a number of other possible concessions exist for those businesses. It's also important to note that the rate of tax on small business companies is to be further reducing over coming years, eventually down to a rate of 25%. It is important to note that there is no change in the small business CGT provisions, where a small business is still defined as one with turnover of less than $2 million or with net assets of less than $6 million. Now for the superannuation changes, some important changes here. The concessional or tax deductible limit for annual contributions has been reduced down to $25,000 from the previous $30,000 or $35,000 for those aged over 49 years of age. Where personal income is in excess of $250,000, the rate on contributions will be 30% rather than the standard 15%, and this threshold is down from the former $300,000 level. The ability to make non-concessional contributions out of after-tax dollars has been significantly reduced. The old rules allowed for an annual contribution of $180,000 or $540,000 under the 3-year bring forward rule. This has all been replaced by a lifetime limit of only $500,000, which operates from last night. Any contributions made over the $500K limit will stand, but nothing else is available after last night, and this is a significant curtailment. Transition to retirement pensions have come under scrutiny as expected, but rather than limit the ability to establish such pensions, the government has moved to deny the tax-free status of assets supporting a transition to retirement income stream, and this was one of the major advantages of doing so. And finally, there's been a major change to funds which are in pension mode and benefiting from the tax-free status. Exempt pension amounts will only be available now on an asset pool of $1.6 million per fund member, with amounts above this having to be reclassified to accumulation accounts and therefore subject to the usual income and capital gains tax. Other changes quickly in the budget. There's been a small tinkering with tax rates for people earning up to $87,000 per annum, relatively inconsequential. Additional funding has been allocated for a crackdown on international companies not paying the correct amount of tax in Australia, and for review of large corporates and so-called high net worth taxpayers. And last, for those of us who buy clothes, shoes and handbags on the net, will no longer be able to buy these GST free, as the $1,000 threshold for such purchases is to be removed. So there's our little snapshot of the budget. For those clients affected by the proposed changes, particularly the small business owners and the superannuation clients, we will be in touch after we've digested the fine print. And of course, we've got an election coming on, and so the extent to which any or all of these proposals finally make legislation is as yet unknown. Thanks for listening. We hope this little summary has been of some benefit. Have a great week.